Okay, guys, are you ready to actually look at and talk about your annual tax return? So what I'm going to be showing you today is the personal tax return, the tax return everyone files. And if you are a sole proprietor, then your business is going to fall onto this tax return. So I'm going to show you the form and just talk a little bit about it with you. They just redesigned this form, actually. So the way that it looks for filing, this is the 2018 form. They have not released the 2019 form yet as of when I recorded this course. So, but this will just give you a basic idea of what tax forms look like. Now, we don't do paper tax forms anymore. We don't fill them out by hand. Everything is done through software. You should be doing it through software. You should not be doing your taxes by hand. Please don't do that. It's just gotten too complicated and you will screw something up. So let me pull this over here and we will take a look at the 1040, and also we will take a look at Schedule C, which is the business tax form. All right, so this is a 1040 tax form. This is what your actual tax returns are going to look like. And so what it is it has all your information on the front page. So it just has your name, your address, your filing status, whether you're married or single, or head of household, like you're a single parent, your dependents, which really means typically children, but there could be other people who are not children that you can claim. And then it's just a signature. So the front half is basic. The back half, page 2, this is a condensed version of all of your income and subtractions and credits and taxes. And so what they did is they took the old form and they squished it down into really small basic things. So wages from your W-2s and things are going to go up here at the top. Then we've got things like interest, dividends, if you have pensions, Social Security benefits, all these different types of income are listed separately. And then they have this thing called any amount from Schedule 1. And so then we got to go find Schedule 1. Basically, they took what used to be part of the 1040 and put it on a different page. So the top half here, lines 1 through 22, which there aren't really 22 lines, but these are going to be where you list your other sources of income. So your business income will go here. If you had capital gains, which is like stock sales and stuff, that'll go there. Rental income will go here. Unemployment income will go here. And other income, which often is hobby, will go here. So all those get added together and then they get bumped back over here to this line on the 1040. So this is going to be a lump of a bunch of different sources of income in theory. Then you're going to have adjustments to your income. So that's the bottom half of Schedule 1. Typically the things that a self-employed person are going to have here is if you pay for health insurance out of pocket and you don't have any other source of health insurance. So this is important to note. The self-employed health insurance deduction only applies if you aren't eligible for coverage anywhere else. So let's say you have a spouse that has a job that offers health insurance and you're self-employed and you guys look at what they have to offer and it's really expensive and doesn't make sense. So you decide to buy a plan separately. You can't deduct those premiums because you're technically eligible for coverage somewhere else. And so that's kind of a bummer. But if you are strictly self-employed, you have no other jobs, you can't get health insurance anywhere else, and you're paying health insurance premiums every month, then you can deduct those here. You can also deduct if you put money into a retirement account like an IRA or a solo 401k. So there are a lot of different options for retirement accounts for self-employed people. So you can put those things there. There's a thing that you will see that's called deductible part of self-employment tax. That's something that if you're using a tax software will auto-calculate for you. And that's basically because as an employer, when you have employees, you as the company pay half of their Social Security and Medicare tax, and they as the employee have the other half taken out of their pay. So when you're self-employed, you're paying that full 15%, so they take half of that and kind of help offset your taxable income for income tax. So it's a little weird, but just know that's there. If you do are paying off student loans, you have student loan interest, that can go there as a deduction. So those are just some of the things that might, again, affect that line where we're going to figure out what your taxable income is. So taxable income now is on line 10 of the 1040, page 2. And that's where the number you use to figure out your tax brackets. So that's important. And then it's going to come down and talk about credits. So if you have any credits, those are on what's called Schedule 3. So there's child care credits, foreign tax credits, education credits, retirement savings, energy credits. So these are all just things that as you fill out your tax return, these may pop up and you may qualify for them. It just depends on your individual situation. So those go and cancel out income tax. So they help cancel it out so you pay less in taxes. And then it's going to total up your tax. It's going to have other taxes. So other taxes from Schedule 4, that's where we're going to find that self-employment tax. We talked about that. The other thing that may come on here, in the past, it was, if you didn't have health insurance, you had to pay your penalty. That's no longer an issue. But maybe you have a household employee, like a housekeeper or a nanny or a babysitter that you pay. You're supposed to pay taxes on what you pay them. So that's something that's there. So that's other taxes, but typically this is just going to have your self-employment tax amount there. Again, you guys, all of this is calculated by the software. So none of this you're going to have to figure out by hand, and you should not be figuring it out by hand. I'm just showing you what these forms look like so they don't freak you out so much when you actually go to file your taxes and you're looking at your tax return. You're like, oh yeah, Melissa showed me those forms before, so now I understand a little bit better. I'm not expecting you guys to become a pro at this at all. So just know that, it'll say like, oh, you need schedule this, you need schedule that. So it's just gonna have these different forms that may or may not apply to you. They may not have any of them, it just depends. So once you've done all these calculations, it will tell you, like how much did you have withheld? Did you pay anything in estimated taxes? That's recorded on Schedule 5 if you made estimated taxes payments, those quarterly payments. Those get counted on here as payments. And so it'll say, basically, did you overpay and get a refund, or do you owe them money and how much do you owe? And see right here, this line 23 is the estimated tax penalty. So that may pop up if you have owed in the past and you didn't pay taxes quarterly and you owed more than $1,000, they may slap that penalty on there, but it's not a super high amount. So just be aware, that's that. Okay, so that is the personal tax return, just like basic form. What I want you guys to really become familiar with is Schedule C. So this is for sole proprietorship businesses. Most of us are going to be sole proprietors. Even if we have a single member LLC, we're going to start as a sole proprietor for taxes. So this is going to ask you, your name, your social security number, and then what type of business you have. And then you're going to have to pick a code. Now, most softwares will help you select this code, but I want you guys to know that you need to pick a code. Do not put unclassifiable. I think it's like 9999999. That is bad. We do not want to select that, because what code you put here helps the IRS review your taxes and see whether what you're claiming as deductions match your type of business. So there are codes for admin, office admin, there are codes for graphic design, there are codes for product-based businesses, there are codes for everything. So, and you can often like Google what code should I choose for this type of business, and you'll see in a forum or somewhere else, someone will say like, oh, that one should always be this code. So it's not hard. And you know, it's not gonna be perfect necessarily, but try to pick something that applies as best you can to your business, so that what you claim as income and deductions makes sense to the IRS. That's actually like one of the first things that they look at when they're deeming if a tax return should be audited, is they need to know, like, does your business code and description match the numbers that are coming on? So accounting method, 99.9% of us are going to be cash. Cash method just means when we get income in, we claim it as income. And when we spend money out, we claim it as expenses. There's none of this like weird accounting. Accrual is more of a when you earn the money, you count it as income. So instead of when your client pays the invoice, you claim it as income when you send the invoice. Now, that only makes sense when you're running a business that's on terms. So say like you send an invoice, but your customer has 90 days to pay that invoice. That makes more sense to run accrual than cash. But typically we're all gonna be on cash. It's just gonna ask like, did you actually participate in this business? Yes. Did you start this business this last year? If it's your first year in business, you wanna make sure to check that box. It's your first year in business. That helps them start the ticker on the, were you profitable in 3 out of the first 5 years? That's gonna help them. And then it's asking about 1099s. Do you need to send them? Did you issue them? So I'm gonna include my 1099 guide in the resources of this course. So make sure to check that out. And then it's just asking for income. So we may, in our tracking, in our bookkeeping software, have multiple income categories. If you have services or product sales or course sales, you may break those down in your bookkeeping so you can see how much money you're bringing in from each of these income streams. However, when it comes to taxes, it all just gets squished back together and put in as sales, like gross receipts or sales. That's it. Now, if you are product-based, you may have what's called cost of goods sold. I'm not going to dive into that in this course because it's a lot more complicated, but that could exist if you have a product-based business, as in physical products, not digital products. And then part 2 down here is all your expenses. So these are all the tax categories for expenses. These might look quite different from the tracking categories that you have in your bookkeeping software. So I dive into this more in my tax deduction guide and also in my wave accounting training to kind of show you guys the difference between tracking categories and tax categories. But just know these are the tax categories that you're gonna have to lump things into. And then there's also this section down below in part 5 that is other expenses. So there are things that may not fit into one of these predefined categories. And so those will get listed down below in the other expenses. Some of the other things you need to be aware of is home office deduction. So again, home office, if you have a dedicated exclusive space in your house where you work from, then there are ways to deduct that on your taxes. Again, cover that in the tax deduction guide. And the other thing is miles. So if you drive your car and travel for business at all, then that is another deduction that they you can put on here, and it will ask you this information. So all of those are in these different parts. This is the cost of goods sold, so that has to do with physical products and physical inventory, that we'll have there. And then all of this stuff flows here, and you'll figure out whether you had a net profit or a net loss. So net means after expenses. And if this number is negative, if you had a loss, it will ask you to check if all of your investment was at risk or some of it is not at risk. So what the heck does that mean? Really what that means is, did you invest your own money, and are you liable for all the money you invested in the business? So whether it came out of your personal savings, your credit card, loan, as long as you have to pay that money back, then everything is at risk. I've rarely found anyone that actually could say my investment is not at risk. So anyways, that's just to be aware of. Pretty much everyone is at risk. So that is Schedule C. So all of these different forms, these different pages, may be a part of your final tax return at the end of the year. If you're doing it with a software online or with a tax preparer, then you're probably going to get this ginormous PDF of all your tax documents. And if you're going into a tax office, then you may get a big old packet of paper. But all of these could apply, may not all apply, but you'll definitely, if you have a business and you're a sole proprietor, you will have a Schedule C, and you will have 1040, and you will have Schedule 1. Those will all be part of your tax return. So those are the annual personal tax return documents for a sole proprietor.